Here's a take from Peter Tchir of Academy Securities, writing the job report was more strange than strong. Joining us now is Peter Tchir. Pete, welcome to the program, sir. Why more strange than strong?
Well, one, if you go back to the JOLTS data, which I like to look at, you had the hiring rate was actually the lowest it's been since COVID. That kind of reached the post-COVID lows. And you also had the quits rate very, very low. And quits rate to me is kind of a crowdsourced bit of data. You had really big revisions to prior months. You've had government shutdowns. So I think, as Lisa said, the 3 month is 68,000. That makes some sense. I think I'm not going to get too excited that we had this super great jobs number. And I'm not going to get too worried that the prior month was super horrible. I think we're having a lot of data calculation and collection issues, and it's coming through in the numbers when they're printed.
Pete, away from the payrolls report, though, momentum. It's a word that's come up repeatedly. You heard it from the White House just moments ago. ADP was strong, ISM was strong, jobless claims were strong, retail sales was better than expected. It's hard to argue that this economy doesn't have momentum. Can you make that argument?
Yeah, I think there is some positive momentum. Again, a lot of this, though, right? Prices have gone up, affordability is high. So how much of this is people being forced to spend more for the same basket of goods they were buying? And I think it's very hard to measure anything right now. It's been very volatile. The conflict in Iran has kind of put a damper on how do you measure things properly? What is permanent? What's temporary? What can people live through? What jobs are being created by this? What jobs are at risk? So I think we're still in this really wait and see to see how this conflict plays out, which, as Kevin Hassett said, could be very strong. I think our best case is we've proceed and finish this to the end, where the Iranian regime really changes and resembles something that fits into the global economy much better.
Given that, and I don't want to oversimplify it, but how do you put all the pieces together of a puzzle to answer the key question, which is, could this shock be a greater hit to growth expectations or a greater boost to inflation longer term?
So I'm looking at trying to parse this into parts of the world and areas that I think will do well, kind of whether we get a quick resolution or a longer term resolution. I think you're going to see Europe actually spend a lot more on infrastructure, energy infrastructure, and building out their economy again, right? They kind of seeded all manufacturing. So I look to that as an area. I think we're going to see a lot of activity with the U.S. helping in Central and South America, right? It's just a natural place. Yes, if we have a successful completion of the war, the Middle East will do well. But again, I think our focus is going to be really much Central South America. So I'm looking at investing there. And I still want to get back to, the rare earths, the critical minerals, the process refining, the smelting required to remain independent. You're kind of going on a theme almost of calling it vertically integrated nations. So every nation doing a little bit more of their own. And that's those are the investments I want to make right now.
Given the fact that a lot of people are investing in the physical world, how much money is getting sucked away from the government bond space in terms of the buyer pace for some of the debt that's going to be incurred to pay for some of this, right? I just wonder if your faith in the physical world and the resiliency and some of the themes that a lot of companies and countries have been harping on, how much that comes at the expense of money flowing into financial assets like bonds that have typically been a buffer against any kind of volatility and economic growth.
Yeah, I think you're going to see a steady kind of headwinds against bonds rallying too much. And it's going to be countries being forced to sell their bond holdings to raise money to buy oil, to buy the defense stocks, and then the issuance of more debt. So I think there's a stubborn headwind facing treasury yields. And that's not just here, it's globally, right? It's a global market. And again, as each country kind of focuses on their own issues, their own needs, I think you're going to see less demand for U.S. treasuries, partly because every country probably has to spend a little bit more than they were planning on right now.
Pete, I often listen to your podcast now. It's fantastic, by the way. I've been tracking that now.
Thank you, John.
Was listening to the last week. Can't guarantee you'll get bought by OpenAI, unlike some, but it's fantastic. Pete, going through that podcast, you lean on a lot of military experience, and that sets up the conversation for you and the team to talk about markets. Can we set aside the communication from government sources over the last week? Because some of it's been very confusing. When your military personnel, your veterans in the team, focused on military posture and what's happening and developing there, the troops, the assets moving into the region, where do they think this is heading?
So that's a great question. One bunch of our military people have said you always want to pay very close attention at the press briefings to what the military say. They're objective. They are trying to give what they can, assess without giving away information. The flip side is both the president and the Secretary of War, they are political figures, so they have to put a political spin on it. So I'm going to try and stick to what we see as the military. We are building up so that we have the ability to do more. Now, some people say we have to use it once we put there. No, this actually, just having it there applies additional leverage on Iran, right? It's hard to say, oh, we might do something with troops if the troops aren't there. So some of this is going to be posturing to push. I think when we talk to our military experts, the view is that the single best thing the U.S. can do is proceed all the way to the finish. And we have to get rid of the, Iran's ability to do anything on the nuclear side, right? The assessment is if there's any country in the world that would take nuclear weapons if they had them and use them, it is Iran. So I think what we would like to see is going forward and finishing this job, getting to the point that you truly have a regime that looks very, very different in Iran, is willing to work with the rest of the world, and we can all breathe a sigh of relief. Whether we get there or not is a question. I think that is a matter of the president selling the war better than he has even to this day to the American people, and allowing the military to complete its job, which is going to take time, and 2 to 3 weeks may even be short on that, but that would be the single best outcome.
Pete, I've got 30 seconds left. The French president does not think we can reopen the Strait of Hormuz through military means. Does your team disagree?
I think we would disagree, though. One, we are very careful in talking about this. It is the ability for commercial ships to transit the strait, or better yet, the willingness of commercial ships to transit the strait. So we have to create a condition where captains and crews on these ships say, you know what, I feel comfortable, I feel safe enough to go through. That will take a period of time. It will take shows of force, shows of display. It probably requires some sort of cooperation. It is interesting yesterday that Oman was on record trying to do something. Technically, Oman controls many of those waters in theory. So I think there is this possibility, and we need to see a coalition kind of build to get that. Again, I'm not sure we can get this in a 2 to 3 week time frame, but I think we would all like to see this proceed to a proper conclusion. And the flip side is the worst case is we walk away and leave this in disarray. That would be, I think, horrible for markets. Even if we popped on day one because of that, this really should be seen to completion.
Pete, thank you, sir. Peter Tchir there of Academy Securities, a company absolutely filled with military experience.
And you can hear that from the podcast where they
fantastic,
line up all of their generals and admirals and talk about the actual what's going on the ground.
Real hard line experience there.
Exactly.
What's happening on the front lines. Let's keep an update.